I kind of want to see what you make here of the tariff announcements that have come down these past few weeks, because the impact of them, of course, hasn't just been here in the US, but as well as on the global scale. So, is this something we've ever seen before from the United States?
Not in 100 years. This is this is really sort of a historic inflection point between the way the U.S. Under presidents of both parties have has pursued international economic policy and President Trump's very different thinking about that. And so the tariffs that went into effect last night, just past midnight, have taken us on a sort of overall basis back to a level of taxation on imports that we haven't seen since the early 20th century, according to some investment houses, 1909.
And obviously, this is something that could, of course, cause prices to increase. Is it fair to say that our constant consumer demand is part of the reason why a lot of our manufacturing has gone overseas? Because we're constantly wanting something at a cheaper price. So has that just caught up with us over the past few years?
Well, there are two different worldviews at issue here. The standard economist explanation of the trade deficit is, in very basic terms, that the United States lives beyond its means, really. Our national savings are lower than what we need to finance everything that we want to buy. And other countries like China and to a lesser extent Germany effectively live below their means by saving more than they consume and by incentivizing their manufacturing sector to export more than they need at home and send that out into world markets. So that's sort of the standard economist view of what causes a trade deficit. President Trump and his advisors have been pointing the finger instead at what they describe as unfair trade practices by our trading partners. Everything from high tariffs that other countries maintain that would apply on the products we try to sell into their markets, and also regulatory issues, product safety requirements, health requirements, subsidies for their manufacturers, a whole range of what are described as non-tariff barriers. The president says those are unfair, and those practices on the part of dozens and dozens of countries explain why we have such a large and chronic trade deficit.
And there's this national security argument that's often made for building things here in the United States. Is that case legitimate?
I would say there's been a bipartisan consensus that's developed since the experiences we went through during the pandemic that support the idea of identifying critical products, whether pharmaceuticals or rare earth minerals that are needed for military applications, computer chips, semiconductors, and trying to develop a greater domestic production capacity for those items so that we don't end up in some sort of military crisis dependent upon China, which obviously is our number one strategic rival. Officials in both parties say it doesn't make any sense to be reliant on China to supply what we need for our military if at the same time we're worried about finding ourselves in a military showdown with China at some point. So there's support for that idea in both parties. Certainly, I don't think anybody except the most extreme protectionist would say that the United States ought to be able to provide or produce absolutely 100% of what we need here at home for domestic consumer and military requirements. That's not going to happen. We should note, though, going into this discussion, that for all the talk about trade and tariffs, and these are incredibly important issues, the United States is less open or less reliant, I shouldn't say open, less reliant on trade than many other advanced economies. Only about 27% of our GDP is made up of imports and exports, maybe a little bit less than that actually. So it's important to bear in mind for all the attention that we pay to trade and tariffs, the bulk of the economy operates in an unrelated area.
I also had the opportunity to get Lynch's take on the claims made by President Trump that the U.S. has been taken advantage of by other nations. For perspective, the U.S. boasts the world's largest economy, with China a not too distant second, and all others following a few $1 trillion behind. So, in the face of Americans being the world's consumers, does the president's case hold up?
Well, I think the mainstream economic view would be that the president's exaggerating the extent to which these trade barriers are responsible for the trade deficit, um, and uh, and is probably exaggerating also the need to take such dramatic action against so many countries. I think there's a wide consensus that China has not been integrated into the global trading system in exactly the way we anticipated back in the year 2000 when they joined the World Trade Organization, that China has maintained many elements of a non-market, state-directed economy, which is not what we anticipated at the time. And so, again, I think people in both parties would say, and I think we would have support from our allies for pressing China to change its practices. But instead, the president has not limited his initiatives or his tariffs to China. He's gone against dozens and dozens, something like 60 countries, including fairly small and much poorer countries like Cambodia. And the idea that the trade deficit between the U.S. and Cambodia is a function solely of Cambodia's unfair quote unquote practices, I think is hard to take seriously. If you think about it for a second, uh, Cambodia is a much poorer country than the United States and a much less populous country. I think there's something like 20 Americans for every Cambodian. So the idea that one poor Cambodian should be buying as much stuff from the United States as 20 reasonably affluent Americans are buying from Cambodia just doesn't make a lot of sense.
One popular punching bag is NAFTA, the North American Free Trade Agreement. Is it worthy of all of the grievances that it receives for what it accomplished?
Well, it's interesting because the concern, to go back to the early 90s when NAFTA was being debated, and Ross Perot famously debated Al Gore on the Larry King show back in 1992, I think. And Perot talked a lot about what he described as a giant sucking sound, as all the manufacturing jobs would be siphoned out of the United States and would end up down in Mexico. And yet, for 3 or 4 years after NAFTA went into effect, manufacturing employment actually rose in the United States. It did not decline. Now, there have been a number of communities, and certainly in the labor movement, a lot of people have had bad experiences with NAFTA, and there are countless examples, and I've reported on some of these myself, where workers were required to train their Mexican replacements before the equipment in their factory was literally packed up and shipped south of the border. So from that perspective, it's understandable why people in the manufacturing sector, to put it charitably, have mixed views on NAFTA. But President Trump during his first term was successful in bringing about a renegotiation of NAFTA, a new agreement called the United States Mexico Canada Agreement, USMCA, which he described at the time as the best trade deal in the history of the world. And yet, by putting tariffs on some products from Mexico and Canada and threatening others, he's essentially, ripping up his own trade agreement.
Made in America being something that's really good on paper. People like the idea. It's a popular one. It obviously suggests that we're employing Americans. But on the other hand, though, it's the labor costs that companies are thinking about in terms of manufacturing. And so, could we see that prices go up if more manufacturing is brought back to the United States?
Yeah, it's almost inevitable that will be the case, because if you think about it, at the moment, manufacturing locations and supply chains are optimized for cost and efficiency. In other words, if I'm an American company, I'm buying from suppliers around the world right now who provide me the best goods at the best price. So I'm in my ideal state at the moment. Now you put tariffs on, and so the things I'm buying from overseas get more expensive. If I keep buying them, I'm paying more for them. If I'm if I respond to those higher prices by looking for a domestic supplier, by definition, he's not as efficient or as cost efficient as the guy I'm buying from overseas, or else I would have been buying from the domestic guy to begin with. So now you're forcing me into a higher cost posture, either by my continuing my current supplier relationships with the now more expensive foreign supplier, or by making me switch to a domestic supplier who's also going to be more expensive. So cost there is going to be an upward adjustment in the price level. Whether that becomes a sort of continuing inflationary spiral is less certain. The administration says no, that it'll be a one-time adjustment, and that may be the case. The danger is that as consumers react to this by increasing their expectations of future inflation, that could prompt them to go out and buy more now to get ahead of what they think will be price increases, and it becomes a self-fulfilling prophecy.
And certainty is so important if you're a corporation who's looking to bring manufacturing to this country because you want to know that your investment's going to pay off and you want to know what to expect down the road. But the president has kind of been in a state of uncertainty recently because he's said something's going to happen, has maybe pulled that announcement back. What does that do for a company that needs to plan years ahead in terms of where they're going to build that next plant and what investments they're going to make and which ones they aren't?
Yeah, that's exactly right, and that is the key problem that's overhanging all of the president's plans. Because even if you accept the logic of what he's done, even if you endorse the remedy that he's chosen to get his desired end state, the fact is nobody knows at the moment whether these high tariffs that just went into effect last night, whether they're going to be around in 5 months, let alone 5 years, let alone 5 months, because the president does talk about negotiating them. We have a pretty good idea that the 10% fee that he put on all just about all imported products, the thinking is that probably will be permanent. But some of these higher tariffs that he's announced against products from individual countries, 46% from Vietnam, 50% for products from some African countries. We don't know. Is that going to be the situation down the road? And then you add in the political element of what may happen in the midterm elections. If the Democrats take one or both houses of Congress, that could be a break on his tariffs. Or what happens after his presidency is over? Will the next guy or gal keep the tariffs where they are, or lower them? And we know from history, in previous episodes of high tariffs, they always do get brought down. And so if you're a company at Jefferson Enterprises and you've got to decide, are you going to spend $100 million, or in some cases $1 billion on a new plant? How confident are you, if that's predicated on tariff protection, how confident are you that situation is going to be the same 5 years from now? It's hard to make that call.
Yeah, and we've seen that even the stock market, it wasn't just here where the markets reacted poorly to these announcements and these pullbacks. It's also been globally. We've seen that the markets have definitely been rattled by the president's announcements. And there is that worry, especially for folks who have money in the market, about if they're actually going to make that money back or recover from basically these recent volatile periods. And so, how long could that recovery be? And what are the experts saying about that?
Yeah, well, it's definitely a concern that millions of people have at the moment. And if you're a young person and you've got decades for your investment to grow, this is really just a bump in the road. If you're 20, 30 years old, uh, you should pay attention to the news, obviously, but I wouldn't be making any investment moves based on this. If you're going to need your money in the short term, if you've got money in the stock market that you're going to need to buy a house in 2 years, or if you're my age and you're close to retirement and you're worried about your nest egg, then it's a bigger concern. Because what we know from history is that the stock market's been a great investment over the long haul. Um, but there are periods, famously from 1966 to 1982, where stocks did nothing. The Dow Jones Industrial Average first topped 1,000 in 1966, promptly fell below that level, and didn't get back above 1,000 until 1982. Now, I'm not saying we're looking at another 16-year period like that, but it's worth bearing in mind that you make money by investing in stocks as compensation for the risk that you're assuming. They're risky investments. That's why you get paid to hold them.
And it's going to be interesting to see with how our economy has changed. Will it be a shorter recession if we're heading that direction? So I appreciate you taking the time to join me and discuss this in depth.
Anytime.